I'm Simon Chaplin and I'm MD here at GreenStones. And today I would like to share with you a new feature, a new report that Xero has developed and put within your software in order to enable you to get a short-term cash flow report projection, we'll call it. Now, this report has its uses, but there is also a fundamental flaw in it, which I'll share with you after we've looked at the report and how it works, in order to make sure that you don't make any mistakes or make any decisions based on the information without having the full facts. So firstly, it's called a short-term cash flow, and I'm looking over here because that's where it is on my screen in order to make sure I share it properly with you. And within your software, you can find it by going to the accounting navigation, then clicking reports, financial, and short-term cash flow. Now, I can't show you how to do that because there's confidentiality reasons around using people's names and all the rest of it. But if you go to accounting, reports, financial, and short-term cash flow, there will be a report in there called short-term cash flow. Now, on my system, overnight, that report now appears under business in Xero. And I don't know whether they've added it to my navigation like that because I've been using it, or whether that's now there for everybody. But if you can't find it under accountancy, reports, financial, short-term cash flow, have a look under business and you might find it under there. So when you do that, what does it look like? Well, it looks a bit like this. Now, the first time you go in, you'll have to select the account that you want to do it on, the bank account that you want to do it on, and you'll have to select whether you want to do it on 7 days or 30 days. But you can change both of those once you have set it up. And once you've set it up, this is the report you get. So what does it look like? What does it mean? So over here, we have a 30-day summary. So you'll see today's balance. So this is top left on your screen. You'll see today's balance, which in this case is 209,000, invoices owed to you of 57,000, bills to pay 15 grand, and then the projected balance, and in this scenario it's July the 4th, of 251,000. Invoices owed to you are amounts that you should be receiving from your customers in the next 30 days. And the important part of this is it's the expected due date. And I'll share something about that again in a minute. But it's the date that you've put into the system. So if you're on 30-day terms, it's the invoices that you expect to receive in the next 30 days. And that's an important distinction, which again, I'll come back to towards the end. And then the same with the bills to pay. So that is invoices, suppliers that you expect to pay in the next 30 days. So basically this 30-day summary says today's balance is 209. We're going to receive 57,000, pay out 15,000. So on the 4th of July, we'll have 251,000 pounds in the bank. Now that's not true. And I'll share with you why that's not true in a moment. But I'll carry on with the screen so you can see what else these numbers and these boxes mean. So underneath, you have got invoices owed to you, and basically a breakdown of that 57,000. So you'll see that we've got 8,500 due within a week, and you'll see the number 5. That means that there's 5 invoices that are due within the week. You'll then see that it moves on to say within 2 weeks, there is 164 invoices, and that's 46,000. So the vast majority of that 57,000 is due in the next 2 weeks. And then obviously over 2 weeks, but within 30 days, there's only one at 1,600. And those figures should add up to the 57, which should be exactly the same as the figure at the top. Now, if we move over to the bills to pay, this is exactly the same, but the other way around. This is not money that you should be receiving. This is money that you should be paying out. So you'll see there's 15,500 to go out. 8,500 of that is within the next week, and that makes up 8 invoices. Then if we move over to the bottom right-hand side, you'll see some suggested actions. And this is the first part, the first struggle that we've got with this little report. So you'll see that there are invoices, overdue invoices of £198,000. So that's the total. There are 224 of those invoices, and they're across 134 contacts. So this little black box I've put in there to block out the name of the one of the people that owes this particular customer some money. So what you've got to do is you've got to go through for all of that 198,000. So in 224 invoices, in 224 cases, you've got to put in an expected due date in order for that to appear over here in your 30-day summary. Now, obviously, that's a big task potentially to start with. So that might put you off. And not only have you got to do it for your customers that are paying you, you've also got to do it for the people that you are paying. So you've got to do it. You've got to do it twice. Now, you can shortcut that slightly by putting in a default date in the customers when you set up the customers and the suppliers, but that's not going to help you now if you've not done it, but it will certainly help you going forward. However, the shortcomings with that is it's the expected due date. Now, the software can't cope with their actual payment terms. So if you've got somebody on 30-day terms and they normally pay you after 56 days, the software won't know that. So it will still include it in that top left-hand box as though it's going to be received in 30 days. Now, there's a way around that with some extra software, which I'll share with you in a minute, but Xero and QuickBooks can't cope with that at the moment. Now, the fundamental flaw with this report is it only works on, at the moment, it only works on invoices in and invoices out. It excludes any bank payments or any bank receipts. So say, for example, you've got a VAT payment that's due to go out, that will not be in here. If you're paying the wages, that will not be in here. If you're paying rent, that's unlikely to be in here unless you receive an invoice for the rent. So in this example, we are sat here on, for example, the 3rd of July, sorry, the 3rd of June, and the system is saying that we're going to have £251,000 in the bank on the 4th of July. However, if we pay the wages on the 28th of June, then the payment on the 28th of June won't be reflected in this. So that balance will be over by the amount of wages that we should be paying. And say, for example, we've got the VAT that should be going out, and in this scenario, it might be going out on the 7th of July. Obviously, that's not reflected in that figure. And if that projected balance was on the 8th of July, then the VAT might not have gone out. So it might be over the 7th of July, but it might not be the 10th of July. So the VAT might not have gone out. So as you're looking at this report, you need to be really, really careful about the assumptions that you make about that projected balance, because it will not include, definitely won't include wages, definitely won't include VAT, and might not include any other payments that you make where you don't get invoices for. So sometimes, for example, you might get large quarterly invoices for things like electric or gas or oil or things like that, and you might be paying monthly for it. That obviously won't include the monthly payments. It'll only include the quarterly invoice as and when it falls due. So you need to be very careful about the decisions that you make off the back of those numbers. Now, in these times of, what should we say, challenges, it's very important for you to do a short-term cash flow over, say, 12 weeks. And I would also say that it might be useful to extend that over 6 months. But let's concentrate on this, on the 12-week forecast. If that's something that you would like to get more control of and potentially move away from Excel spreadsheets, if that's what you're using, then there is software out there that we can help you use that use artificial intelligence in order to get that number more accurate. So the software will look at the normal payments. So say you've got a customer that normally pays you over 56 days or in 56 days. This software will take that 56 days and project the cash flow forward based on those 56 days. And say, for example, you normally pay your suppliers in 14 days as opposed to their expected 30 days, then the software will do exactly the same with that as well. So there is software out there that will help you through artificial intelligence do a much more accurate short-term cash flow forecast over the next, say, 2 to 3 months, rather than relying on the Xero report. And obviously, if you would like to find out more about that, you would like us to help you do a short-term cash flow forecast, whether that's on Excel or using the more sophisticated software, we'd be delighted to have that conversation with you. So all you need to do is just give us a ring on 01733 371 or email me on simon@greenstones.co.uk, and I will make sure the appropriate team member gets in touch in order to talk about how that works with you. And I'll share those details again at the end of the video. So just to summarize, this is a new report that Xero has produced, and for me, it has value, but it's also quite dangerous. You need to make sure that you update the expected due payments if you want to use it at all. And once you've done that, as you're using the numbers, you need to be very conscious about the bigger payments that you're going to make that you don't receive invoices for. So generally speaking, VAT and the rent, if you don't get an invoice, the wages and a PAYE payment, for example, is another one that's not in there. So if you're going to use it, then do it so with those caveats. If you would like to be a bit more sophisticated and use some short-term cash flow forecasting software, then please just get in touch with us and we can talk you through the options and help you implement that and use the system. And to do that, just give us a ring on 01733 371 180 or email me on simon@greenstones.co.uk, and I'll be happy to share the team member that's most appropriate to have a conversation with you. And as always, if you have any questions around any of this, then please feel free to get in touch as well.